Good morning, ladies and gents. This is Luke. Today marks Friday, November 14, 2025, and this is the chatting session for today. So we're going to be using what we talk in here during the day to make our trades or to stay offside. So starting with the monthly, we keep this concise and short. Monthly, it's been a dumpy. All it did was, again, touch the midpoint of that wick, and it dumps, and now it's probably heading towards the midpoint of this wick. At this rate, it can be going downwards or maybe towards that monthly FEG. But again, monthly is very bullish order flow, and we cannot say anything about that until that changes. So weekly is still no order flow, but we can see that we got that monthly, so that monthly can start now to be pulling it towards us, right? It can be pulling it towards us. Notice I don't care about this weekly, but if I go ahead and, for example, yeah, you can see that we're forming immediate rebalance even on the weekly. So there's no order flow on the weekly, but on the monthly there is. On the daily, we got a daily debug breakaway gap from yesterday. We didn't want it to be touched, but we were targeting anyway, and it came and went through right away, right? So it's kind of inverse, and so once this kind of closes, we'll form a bearish FEG and a bearish BPR as well. So we're probably going to be going for the midpoint of this wick, which we are at now. So I don't know, maybe in the new game we'll get retracement up and then come back and smack that low, that external range liquidity. So from internal to external, we can use that, maybe retrace up, like open, manipulate up, distribute down, possibly. And this is a very important low. Why? Because as Chadley explained yesterday, this is relative equal lows. This is relative equal lows. Yes, this is more important than these or these. All right, so that's something important. Nobody teaches you that. All these YouTube 5-minute gurus who are stupid, who don't know nothing about trading, just know how to get your money, they teach you that. But this is actually what they target. The algorithm will be targeting these relative equal highs, the relative equal lows. Yes, this the manipulating. People used to think this is the manipulating low. You accumulate, manipulate a low, and then go up. Now, that's not. This is priming. This is targeting. This is targeting. This is priming. This is priming. This is priming. This priming to tell people this is safe to trade. Okay. So anyway, I spent too much time on this, and this is not part of the charting session. We only focus on order flow. It's an order flow charting session. So moving on. So the daily is obviously it was bullish, but now it's obviously it was yesterday. Now it's broken. Now it's nothing. We have no order flow on the daily right now. Okay, you can't say daily is bearish, right? You cannot say that daily is bearish, because look here, it was bearish, the next candle was bullish. Do you say, was the order flow bullish? No, that swing high, that swing low, it was bearish with that, thanks to that FEG, that right there. This pump is just a pump on a candle, right? So the order flow on the daily is still undetermined. We need a swing low to form and an FEG, then we can say it's bearish order flow. Right now it's nothing. 4 hour 4 is pretty nice. We got 4 hour breakaway gap, so I don't think it's gonna come back to that 4 hour until we at least come back to this rejection block right there, which we at anyway, or the midpoint of that 4 hour as well. So we've got multiple targets. I'm deleting them, but you can keep on checking them. Finally, with the ultimate target of that low. So what you can do is you can wait for a retracement to that 4 hour. Put like, don't know if we can afford it. That's a huge trade. Sorry, oops. Like this, put it for, I don't know, if this is 800, that's for about $400. This will be about 200 bucks with 2 micros, 200 bucks with 1 micro, possibly, and you got like almost a 3-hour trade, 330 points. You can go for it. You can even go for the maximum target of like 2,000 ticks. You can get it today. All right, that's a possibility. So only be looking to enter at these high time frame, and don't worry, if it's too far away, you're gonna form a new 4 hour at 6 a.m. and probably we form an FEG then, and then you can enter on that, which will be around here, for example. Here's the 4 hour. The hour, we don't have any hourly FEGs, unfortunately. We do have this tiny one right here, but it's overridden by the high time frame 4 hour breakaway gap. But we might form an hourly FEG here, for example. I don't know if this is going to be an FEG. No, it's no FEGs here. So drop into the 50-minute. So there's no order flow on the hourly, but there's order flow on the 4 hour, which is bearish. The 15-minute, we just form the 15-minute bearish order flow. And if we touch this and it displays, if we enter here, that would be a confirmed order flow entry drill. So confirmed order flow, right? Why? Because we have swing high, swing low, and then FVG in between. That was the order flow bearish. We came to it, respected that FVG. It's deleted because no longer needed right now. This is the new order flow. And if we form a new FVG from that displacement, then when you touch it and it moves away, this would be a higher probability trade than entering on this one. It would be a much higher trade possibility entering on this one. Okay, something like, yeah. So that's about it, guys. Thank you for joining. I made it a little bit longer, but because I was explaining a little bit more things, and yeah, but I'll keep it simple as always. Thank you for joining. Use this information for trading today. So you can either, if you're on the low time frame, you can look for that 15-minute entry with a stop loss above the order flow, or if you want to minimize your stop loss here, you get 2-hour trade, and optimally you target the low hanging fruit, you got much more higher lower targets. Okay, if you want more conservative trades, you will have to wait for the 4-hour to touch, or a new 4-hour or a 1 hour, whatever high time frame, and then you drop to the low time frame, 3-minute, 5-minute, 15-minute, 1 minute. You scalp a trade. So example, let's say this was this is like 4-hour trade or candle. You wait for it to touch, and then you form a 15-minute FVG. You enter at the 15-minute FVG, or if there's a 1-minute FVG, you enter at the 1-minute FVG. If there's a 5-minute FVG or 3-minute FVG, you enter on those. Okay, but there must be narrative FVGs, not any random FVGs, not any random FVGs. They have to be drawn by our indicator. Okay, because our indicator draws only narrative FVGs. If you can do it by manually, you can do it, of course, by manually. You find a swing high, swing low, and a FVG in between, but you gotta be knowing, you gotta take into account the high time frame, because if there's a high time frame FVG and you're looking for a small time frame on your own, the high time frame will be overridden and you'll be just drawing a low time frame normal FVG, which acts as a narrative FVG, which is not narrative FVG. Okay, so if that confuses you, just use our indicator, and you can get access all to our live streaming, everything, our indicators for just $7 for 1 week trial, and if you like it, you can continue with 60% off. I cannot function without my indicators, and I'm a seasoned trader, so I don't know about you guys, but I don't like being naked on the chart. You see, I don't have a buy and sell indicators. I just have one thing drawn on my account, on a chart, or 3 things: line, and a FVG. That's it. Thank you. See you guys. Peace.